Is about how to get mortgage in out of states. Obtaining a mortgage in another state not always easy. When buying a home long distance, you face several disadvantages, including not knowing the neighborhoods or state law, depending neighborhoods or state law. Depending on the circumstances surrounding your move, the lending guidelines may be stricter than if you were purchasing locally. Fortunately, there are steps you can take to move, obtain an out-of-state mortgage easily. Your reason matters. When you apply for a mortgage in another state, the lender will consider the reason you want to buy the home. If your intent is to move in the home, your interest rate may be lower than the interest rate an investor can accept to pay. The lender may even require a higher down payment, according to Relator.com. There is a greater default rate on investor loan than owner-occupied loan. To minimize this, banks may even turn down investors who want to buy out state. Seek the local agents and brokers. Contact an agent in the area where you plan to buy. Ask local for referrals and recommendation to help you find an experienced agent. Buying a home is hard enough without the added of being an outside state of buyer. You want an agent who can help ease the process. Your agent can also refer you to local mortgage broker. Although most lenders are national, a local broker is familiar with the lenders and knows their guidance and requirements. Job stability. Because the lender will need to verify you make enough money to cover the mortgage, you will want to have job stability before you apply. Lenders like to see at least 2 years of employment within a particular career field to establish stability. If you are pre-qualify for a loan while you are still employed at your current job, problem can arise if you switch jobs before the closing. If you are transferring but staying with the same company, request a letter from the employer to submit to the mortgage company. Create a plan. Discuss your situation with your real estate agent and broker. You will need a plan before buying in another state. If you are bringing up a vacation home, you will need to make sure you meet the income requirement necessary to support a second mortgage. Inform the broker. If you know will be unable to attend the closing in person, the broker can arrange for you to complete paperwork in via fax or mail. How to buy a house when job security is tentative. When job security is tentative, committing to any long-term expenses is often scary. Banks may be a little leery lending to applicants with an unstable source of income. Lenders generally prefer to see an established employment history with no gaps in employment. Although buying a home when job security is tentative may be more challenging, is it not possible? Step 1. Meet the credit requirement. Pay all your bills on time. Payment history. Count for 35% of FICO credit score. If your job security is tentative, prove to the lender you are capable of meeting all your payment obligations. To obtain a conventional mortgage loan, most lenders prefer a credit score of 660 or higher. FHA credit requirements are less strict. Requirement a minimum score of 580. In addition to credit, lenders access and ensure you have enough money to cover your mortgage each month, even if you are temporarily unemployed. Step 2. Build up a reserve. Lenders also prefer to see liquid assets that can serve as an emergency fund to pay bills and living costs if you lose your job. Ideally, lenders prefer to see enough money in the bank to cover at least 6 months of expenses with tentative job security. It is the best to have a little extra set aside to show the lender you are prepared. Step 3. Keep your job if possible. If Even if your job security is tentative, it is the best to avoid switching jobs until after you purchase a home. Lenders are looking for 2 years of employment in the same field, but a new job makes it difficult for lenders to forecast your earning ability without an established work pattern. You will need to improve recent pay stubs. W2 forms income work pattern. You will need to provide recent pay stubs. The mortgage lender may verify employment by calling your employer or mailing an employment verification form to complete. Some lenders will ask for verbal and written verification from your current and past employers. The employer may even be asked to verify the likelihood of your continued employment. Mortgage companies have the ability to use their own discretion when verifying employment. If using a mortgage broker to shop many lenders, since brokers work with a variety of lenders, they are aware of each individual criteria and guidelines. Ask the mortgage company about buyer protection benefits. For example, Bank of America offered borrowers the option to enroll in a buyer's protection plan that covered the mortgage if you find yourself involuntary, unemployed, disabled, or suffering a financial hardship. To qualify, you must enroll in the plan prior to closing. The home must be your residence and can't be an investment or rental property. The loan must be less than $500,000. If your lender doesn't offer protection, you may be able to purchase private mortgage protection insurance through our life insurance or homeowner insurance. How redo my mortgage? If your financial situation has changed since you purchased your home, it may benefit you to refinance your existing mortgage. Whether you are looking to save money by refinancing into a lower rate, or whether you hope take cash rate, or whether against the quality.